Hello. Our topic today is the PCAOB standard unqualified or clean audit opinion. That is the opinion issued by auditors on public companies because, of course, the standards of the PCAOB apply only to the audits of publicly held entities. Sometimes this opinion is referred to as the new PCAOB standard opinion. The reason is that for about the last 75 years, the basic audit opinion issued by auditors of companies was basically unchanged for about 75 years. And in 2017, the PCAOB undertook a project to update and modify the standard opinion, basically with the purpose of disclosing more information which they believe would be useful to users of the financial statements and of those audit opinions. And so the new opinion became effective for what are referred to as large accelerated filers, that is, very large public reporting companies, for fiscal years ended after June 30, 2019. For other than large accelerated filers, the new opinion became effective, is becoming effective during this year of 2020. And so if we look at the format of the new report, we see that we can see the elements of that report and the things that have changed from the previously existing report. Of course, at the top, we have a required heading of the report of independent registered public accounting firm. And that means, of course, that the firm is independent in accordance with PCAOB and SEC independent standards, and that the firm is appropriately registered with the PCAOB to audit public companies. And the standard audit report is addressed specifically to the shareholders and the board of the directors of the company being audited. Now, in terms of actual practice, that was generally the addressees of the audit report previously, but the PCAOB codified that in the new audit report standard to confirm that indeed was who the auditor's report should be addressed to. The other thing that the PCAOB did was, for the first time, require specific sections of the audit report, specific section headers, and specific titles to sections. And so the PCAOB has the auditor get right to it and get the deliverable out there right off the bat. And so they required that the first paragraph of the auditor's standard report be labeled the opinion on the financial statements. And as you can see in that first opinion, referred to as, of course, the opinion paragraph, the auditors identify which financial statements that they have audited. And the financial statements, the types of financial statements, and the years that those financial statements relate to. So users of the financials know exactly what financial statements and what periods are covered by the auditor's report. Underlined here in this first paragraph is the new addition in this new report, which indicated, again, to clarify, not to change, but to clarify that the auditor's opinion extends to the notes and, if applicable, schedules in those financial statements. So the last sentence of that first paragraph is the payoff for users of the financials. In our opinion, the financial statements present fairly, in all material respects, the financial position of the company and its results of operations, etc., in conformity with whatever the accounting standards happen to be, U.S. GAAP or IFRS perhaps. So right off the bat in the standard clean opinion, this is the part that has traditionally been referred to as the pass-fail opinion, indicating to users of the financials that the auditors do issuing their forward positive opinion that there are no material misstatements of accounting or disclosure included in the financial statements that the report applies to. And so if the first paragraph was the opinion, the second required section with the required label basis for opinion is what's the first paragraph, and the basis of opinion is what's referred to as the responsibility paragraph. This is where the auditor clarifies for users of the financials exactly who's responsible for what. And as it says right off in the first sentence, the auditor clarifies that the financial statements are the responsibility of the company's management. The auditor doesn't prepare financial statements. They audit them. And management is responsible for the preparation and the amounts and disclosures included in the financial statements. And then the auditor goes on to say that the auditor's responsibility is to express an opinion on those financial statements. And then again, the auditor clarifies that they are a public accounting firm registered with the PCAOB in the United States. And again, this emphasis on independence. The auditor is independent with respect to the company in accordance with all U.S. federal securities laws and SEC rules and regulations and the PCAOB's own independent standards. So the third paragraph that begins "we conducted" here is what's referred to as the scope paragraph. This is where the auditor talks about the work that the auditor did. The auditor indicates for a public company is required. The audits were conducted in accordance with standards of the PCAOB. And the standards require that the audit be planned and performed to obtain reasonable assurance, not absolute assurance. The auditor is not saying the financial statements have no errors in them. They're just saying that there are no material errors, as indicated by the statement that the auditor's opinion that the financial statements are free of material misstatement. And another, whether due to error or fraud. This was another emphasis that the PCAOB wanted to build into the opinion to clarify for users of the financials, and I think to emphasize the importance to the auditors themselves, that they do have responsibilities for errors, misstatements, whether they're due to errors, unintentional errors, or actual fraud. It'll be the topic for another discussion what the auditor's actual responsibility for fraud is. But basically it's laid out here. The auditor is responsible to plan and perform the audit to obtain reasonable assurance the financial statements are free of error, whether misstatement, whether due to error or fraud. And so we can talk more in a later session about the auditor's specific responsibilities for fraud. The next section will be refers to internal controls. Of course, when the Sarbanes-Oxley Act of 2002 was implemented, the auditors became required to actually issue two opinions, one on the financial statements and one on the company's internal control over financial reporting. Now, there are some smaller companies who, based on their size, have been excluded from the requirement for an internal control audit. And so if that's the case for the company, this paragraph indicating the company is not required to have an internal control audit will be included in the opinion. If the company is required to have an internal control audit, either the opinion on the internal controls will be included with the financial statement opinion in the same document, or there'll be a reference from the financial statement opinion to a separate internal control report and opinion from the auditors. And then this last paragraph of the standard opinion goes on to dive a little more into what the auditor specifically did in the audit. And as the first line indicates, the auditor performed procedures to assess risks of material misstatement. One of the key parts of any audit is the risk assessment. It's the basis for designing and planning the company's audit. And so the auditor says, we did that. And we assessed the risks, and then we designed and implemented procedures to respond to that risk. And the next sentence is important because it indicates that we examined on a test basis. And test basis is important because not 100% of all transactions of the company are not tested. Sampling is a very important part of the audit process, and therefore that's made clear in the opinion. And then we examined evidence, the information provided by the company, which supports the amounts and disclosures in their financial statements. And then finally, the opinion says that we, as the auditor, our procedures included evaluating the accounting principles used, was GAAP properly applied, and importantly, the significant estimates, one of the more complex areas of audits, and overall, and as well as evaluating the overall financial statement presentation. So the auditor concludes by finally saying that we believe that our audits provide a reasonable basis for our opinion. The next section is extremely important. Critical audit matters, if applicable, and that's what's in the process of being phased in through 2020. This is one of the real big new features of the new audit opinion. Critical audit matters are basically those items in the audit that were complex, difficult, hard to obtain evidence, subject to significant judgment, maybe subject to significant discussions with management, and also perhaps were of such complexity and importance that the auditor consulted with their national office on the proper accounting treatment for an item. And so the intent of the PCAOB here, this was one of the most important reasons for issuing the new standard, was for the auditor to talk about, to the users of the financials, to talk about those complex areas, those things that were really hard in the audit, so that the user of the financials can focus in on them and perhaps follow up and request more information about those from management. As we know, the auditor speaks only through the opinion. So this gives the auditor a chance to say more about what were the difficult and complex areas of the audit. Finally, you'll have a signature, which is a manual signature of the firm, signed by the audit partner in charge of the engagement, signing the firm's name. And then another new requirement that came in with the new audit report was the so-called auditor tenure disclosure, where the auditor is required to disclose how long they performed the audit of the company. Finally, you have the city and state or country. The typical practice is that the city and state will be the location of the office, the principal office involved in the audit, and where the signing partner is located. And the last thing on the new audit opinion, which has been on the previous audit opinions, of course, is the date. The date of the audit opinion is extremely important because it represents the date at which the auditor completed performing audit procedures, and after that date is no longer responsible for updating audit procedures and changing this audit report, unless, of course, the report becomes reissued at some later date. That's a quick overview of the new PCAOB standard audit opinion. Hope it gives you a little bit more insight into the specifics of that opinion and what the PCAOB was attempting to accomplish with the changes. And we'll continue to see this develop as 2020 rolls through, and lots of assessment will be done on the new items included, specifically around the critical audit matters.